Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Young, good afternoon. Thank you for coming on today.
Happy to be here.
Well, let's start in the U.S., which saw inflation come in last week at the highest level in 39 years. Since October, it's been running in the 6% range, and last month rose to 6.8%. Investors are watching to see if this speeds up the Fed's move to a tighter policy. Tell us about the inflation situation, Professor, and what you make of it.
Okay, well, the year-to-year inflation, as you said, was 6.8%. This was the highest since June 1982. Month on month, it was slightly better. It was 0.8%. That's still very high, but it was down slightly from where it was in October, month to month, which was 0.9%. Core inflation, which excludes food and energy, was year-on-year 4.9%, and month-on-month it was 0.5%. Again, month-on-month it was down slightly from October. While most of the categories within the Consumer Price Index grew by more than 0.3%, signifying that inflation is spreading to other categories, the highest inflation rates were concentrated on just a few goods. For example, gasoline month-to-month rose by 6.1%. Remember, this is month-to-month, so rising by more than 6% is really high figure. And then used cars rose by 0.5%. New cars rose by 1.1%. And for apparel, clothes, again, month-to-month, it rose by 1.3%. This is presumably due to the transportation bottleneck that we've been hearing about in the United States, where not enough supply is coming in from other countries. Because of these factors, Fed Chairman Powell in congressional testimony said inflation will be longer and higher than previously expected. Most analysts believe that he is setting the stage up for accelerating the tapering plans. So the market expects the Fed to announce acceleration of tapering when it meets on Wednesday and Thursday this week. And now the market is thinking that the end of tapering will come in the first quarter rather than June as previously scheduled, which sets up the possibility of the U.S. interest rates rising in the second quarter rather than the second half of the year. The big question will be whether Powell will hint at raising the interest rates also, or will he still maintain a separation between the end of tapering and the rise of interest rates. There are some wild cards in play, which may delay the end of tapering and delay the raising of the interest rate. First is that the factors driving up inflation seems still to be somewhat temporary in the sense that it is due to the pandemic. The part shortage and the port sea transportation bottlenecks, they will get better if the pandemic lets up. But because of the new Omicron variant, it is questionable whether it will go down. And the another wild card is weaker than expected job creation, but the reason that the job creation is weak seems to be not related to monetary policy, but people's fear over the coronavirus and people's dissatisfaction with the current wages and job conditions. So most likely the Fed will probably raise the rates this week. And accelerate the tapering this week.
Right. Well, on Friday, stocks in New York closed higher. Looking ahead to that meeting, the S&P 500 at a new high. What's the story in the global markets? Okay,
after falling on the 9th, despite the inflation report on Friday the 10th, the U.S. market rose strongly on Friday. S&P rose almost 1%. Dow rose by 0.6%, NASDAQ by 0.7%. And for the week, Dow gained 4%, S&P gained 3.3%, and NASDAQ gained 3.6%. It was the best week for the Dow since March and best week for the other two indices since February. According to analysts, the market did very well on Friday because inflation actually came in less than what the analysts expected. And there were indications that the price rises for used cars, lodging, airfare, have peaked. Global energy prices, oil prices at least, seem to be heading down, and some hopeful signs that bottlenecks at the ports are beginning to loosen up. So we may have seen the peak of high inflation, or at least that's what the investors hope. Now, in Europe, the major markets were rising until Tuesday, then falling for the rest of the week. DAX, CAC, and FTSE all fell on Friday between 0.1 and 0.4%. For Asian markets, it was mixed last week. Nikkei was up at the early part of the week, but down at the latter part of the week. Shanghai rose pretty steadily. Hang Seng was generally level throughout the week. But all three markets today, they haven't finished trading yet except for Japan, but they were up today between 0.4 and 0.7%.
And here in Korea, the KOSPI was higher through most of the session today, but turned south this afternoon as retail investors turned to selling. There was strength in a few sectors, but not many of them. What's happening here in Korea?
Okay, well, for the KOSPI, it started high today and it rose in the early part of the morning, but it started falling after 10 a.m. Now, this falling of the KOSPI index, it comes despite the morning report that Korea's December exports for the first 10 days have been highest in Korean history, and confirmation that 2021 exports will also be highest in history, over $640 billion. The analysts are generally saying that this is because markets are nervous before the FOMC U.S. Fed meeting scheduled on Wednesday and Thursday, and the KOSPI closed today at 3,001.66, down 0.28%. Individuals and foreigners sold, institutions bought. KOSDAQ, it was much more of a roller coaster ride, but it fell substantially in the afternoon. It closed at 1,005.96. It was down 0.55% today, and individuals bought, and institutions and foreigners sold.
Well, Professor, we've talked a bit about the Fed already. Other than that, coming up in the next few days, what's on your radar?
Okay, well, for the Korean numbers, personally, the interesting number is going to be the export and import price index. I've mentioned that the rise in volume of trade is good news. Rise in prices of exports and imports are not necessarily good news. So with the price index, we'll be able to see how much depends on the price increases and how much depends on volume increases. And then the November monetary policy monetary policy meeting minutes are due to come out on Tuesday as well. Wednesday, it's going to be the most interesting Korean report, the November employment report. And then Bank of Korea also has October's money supply, liquidity, and household debt by savings institution report coming out on Wednesday. And on Thursday, there will be third quarter financial statement analysis telling us how well the firms did in the third quarter. Foreign statistics, during the next week, the U.S. Producers Price Index and U.S. retail sales are coming up, and U.S. oil reserves will also affect the global oil prices. For China, their industrial production numbers are going to be coming up, and Eurozone consumer index numbers are also coming up next week. Those will give us some idea on how the global recovery and inflation are doing.
All right, Professor, we'll look forward to checking in with you on all of that next time. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you.